I have to hit continue there. Okay. So welcome to our second class. Game plan for today is to get us through chapter 1, take a look at a chapter 1 practice midterm, and make some good headway into chapter 2. If not, maybe even finishing chapter 2 and maybe even getting into the practice midterm for that. So finish chapter 1, see if we can carve out a good chunk of chapter 2 today. Okay. Now, a couple of announcements. The good news is I fixed the problem, I believe, with the office hour login. I don't know. There was a time where I could copy the meeting URL and paste that and it worked. Now, for some reason, I'm having to go to a page in Zoom where it copies the URL in order for it to work. So a couple students from this class tried to join the office hour yesterday and we're getting something like the link doesn't exist or something. And I saw that when I went and clicked on it, yeah, it has that problem. So I think I fixed that now. I wasn't able to deal with it yesterday during the office hour because I have students coming in and then I have a San Jose State class that starts right after my office hour. So it got a little difficult for me to handle it in the moment. So if you're trying to get into the office hour yesterday and you need to speak to me, right away, sooner rather than later, I can make some time on Monday, even though it's not my scheduled office hour. Just send me an email. We'll agree on a time, and then you'll be able to click on the office hour link and come and see me on Monday. And of course, going forward, we'll still have the office hour on during the scheduled time, which is 3:30 to 5:30 on Wednesdays. Okay, but this should work now. I don't think you should click on it now because if you do, it's going to take you out of this Zoom meeting and try to place you in that one. So a little later, you may want to click on it, but it should be okay now. Okay. Any question on that? And I apologize for that. I don't know why it's not letting me copy the link and paste it anymore. I have to go to the part on Zoom where they have you copy the link, and then it seems to be happy to work after that. Okay, that's the good news. The frustrating news is I went and tried to replicate the situation that you were encountering with McGraw-Hill, and I used a different email than what I use as the instructor for the class, and I got the same thing that I think you were seeing, which is it's asking you for the connect code, and it's not giving you the option of, say, providing your credit card at that point in time, or taking advantage of the 2-week trial period. So I'm like, okay, I see what you guys were saying. So I called McGraw-Hill Connect on Wednesday, asked them to solve this problem, heard nothing back. Called them today again this morning, and they say, oh, we fixed the problem. And I'm like, well, great. It would have been nice for you to have let me know. How did you fix the problem? And they said, well, we fixed the problem that the students just need to go to mheducation.com and purchase the code. And I'm like, well, you haven't solved the problem. The problem was that it wasn't offering the credit card and the the 2-week trial period. So they said, oh, okay, well, if you want something on that, you're going to have to go to your account manager for San Jose State. And I'm here to tell you guys that these account managers are more trouble than they're worth. So I'm not going to do that. So that means that we are stuck really with this potential solution that they discussed, which is to go to mheducation.com, and then I guess here is where you could purchase a, now they're doing this to me. I'm not too happy with McGraw-Hill right now. You could go in and purchase the Connect code somewhere here on their website. I'm not exactly sure where that is, and you may be able to ask them, go to their support and ask them where to click to get the Connect code so you can enter it in to get the textbook and stuff. But I don't think that you should be obligated to purchase a book and whatnot when they generally offer a 2-week trial period, and they're sort of, for some unexplainable reason, denying that opportunity to us. So I am telling you that I'm making this textbook because of this unusual circumstance. I'm making this textbook completely optional for you. So it is up to you as to whether or not you want to try and purchase the Connect code for this class. If you want to purchase it, you can. If you decide to opt out, I do not think it will impact your ability to learn this material and do well on your exams and whatnot in this class. I think you'll be fine. Question? Okay. You know, I generally don't require the book, and then San Jose State started telling me you have to require it because there has to be required reading, etc. And I feel like every time I go down the required path with McGraw-Hill, I end up with some convoluted nonsense like this. So again, I apologize, I guess, but it's really kind of beyond my control. And at some point, McGraw-Hill starts putting me in a corner, and they start sort of punting to each other. And you know, I had them reopen that ticket. If they come up with a solution to allow you to take advantage of the 2-week trial period, I'll let you know. But it sounded to me like they were just going down that path of, well, I let the right hand take care of the left hand, and no hands are taking responsibility to fix the problem. And it's not the first time I've had that outcome with them on a topic, on a subject, on an issue. And so, believe it or not, McGraw-Hill's better than Wiley, and they're better than Cengage, for wherever that's worth. Okay, question, concern? Okay, so I wanted to start with those two updates, all right? And the game plan, as I mentioned for today, is to finish the chapter 1 slides. Okay, so I'm gonna sort of pick up where we left off, more or less, and then I'm going to go ahead and jump us into the practice midterm for chapter 1. And I think that'll give you more of a comfort level of how I'm going to expect you to get this information under your belt for testing purposes. And then we will hopefully have some time to start to hack away at chapter 2. Okay. All right. So let's just go ahead. And I want to start with this slide that you see on the screen now. And I feel that this slide is worth reviewing again, even though we talked about it last time, because it gives you sort of that 30,000-foot view, that macro view of what the basic reporting model is that all state and local governments have to develop. When we say state and local governments, we're obviously talking about states like the state of California. Local governments are things like counties, cities, townships, etc. So if you were to pick up the city of San Jose's financial reporting package, this is what you would see. Okay, City of Hayward, State of California, they all have to follow this same format. So the first thing you see is a management discussion and analysis. And I wrote RSI next to that so that we remember that that is required supplemental information. So when you pick up that financial reporting package, they say on top needs to be a management discussion and analysis, which is a narrative analysis of the financial position of that government. As we said last time, they're not talking about their goals for infrastructure. Well, they might talk about that. They're not talking about their goals for some sort of, legislation and whatnot. They're talking about financial aspects. And of course, if there was some project that was an infrastructure project that was going to involve, obviously we have financial implications, they might talk about that. But again, they're talking about financial aspects of this government. The second thing you see, and why I put that 2 there, is the basic financial statements. And the basic financial statements are consisted of the government-wide statements, the fund financial statements, and the notes there too. And remember, we said that little double-headed arrow is telling you that basically you should be able to understand the relationship between the disaggregated fund financial statements that are really there to provide additional detail about this government, okay, and the consolidated government-wide. So this is disaggregated information providing additional detail. We take that additional detail and we do what? We roll it up into a set of consolidated financial statements. So unlike you might see with a corporate set of reports where they would select certain larger segment information that they would provide you as part of a footnote disclosure in their consolidated statements, here we're saying we're going to show you the additional detail. We're going to show you the individual pieces that constitute this consolidation. Then we're going to consolidate that so you see a government-wide position and a disaggregated fund level situation, look at the company. And then we're going to sit here and make sure that you can see the relationship between these. We're literally going to provide a reconciliation that shows you how you go from the fund financial statements to the government-wide statements. And then, of course, notes are an integral part of any set of financial statements. So we call that whole middle piece here the basic financial statements. And that's the second thing that you see. Question on that? Okay, and then finally, you come down to this third box, the third thing you see, and it turns out that that is also required supplemental information, just like the MD&A it is. The only difference is what? It would appear in the package after the basic financial statements, whereas the MD&A appears before the basic financial statements. But both the MD&A and the required supplemental information other than MD&A, obviously, are required supplemental information. And there you would see, and we're going to take a look in Chapter 2, an example of the types of things you see there, but it gives more granular detail about, again, financial aspects dealing with this government. For example, maybe we will provide a schedule comparing what we budgeted to our actual outcome, and users can go down and look at additional information there, like pension information. It goes on a bit, okay? Now, notice that everything on this model, it falls really into 2 categories, right? It's either basic financial statement or required supplemental information. Required means what? You have to provide it. One time I was teaching a class and I said, required means what? And this person said optional. No, it's the opposite of optional. Required means what? It is required. You have to provide it. Supplemental means that it what? Adds on to something else. Well, the only other thing in this model is the basic financial statement. So the MD&A and the required supplemental information other than MD&A are both there to do what? Supplement the other piece of this, which is the basic financial statements. Question? Okay, good. So once we have that as sort of our 30,000 foot view, okay, what we're going to start to do is start to get a visualization as to how that would look in some of the financial statements. So remember that we said there are 3 categories of funds. There are the governmental funds, which include the General Fund, Special Revenue Fund, Debt Service Fund, Capital Project Fund. There are the Proprietary Funds, which include the Internal Service Fund and the Enterprise Fund. And there are the Fiduciary Funds, which include the Pension Trust Fund, the Custodial Trust Fund, the Private Purpose Trust Fund, and the Pension and Employee Benefit Fund. Okay. Now, there's a total of 11 funds, right, that fit into these three categories. 3 categories, 11 fund types. Okay. And I gave you this thing to help you to remember the 3 categories and then the fund types. And this mnemonic is GRASP, C, and I told you just remember KIP. Okay, you don't have to remember that PO part. I think that gets too much. But if you remember GRASP, C, KIP, that helps you to remember the funds that fall into these categories. Now, this is the fund structure, right? 11 funds, 3 categories. But then I mentioned that we will take our governmental funds plus 1 of my proprietary funds, my internal service fund, and I will include it on my government-wide statements under the governmental activity column. We will take our enterprise funds, and a government could have several enterprise funds, and we're going to include that under business type activity. Okay. Is there a question? There's a question, guys. Just jump in with the questions. Okay. You don't have to. Yeah.
Can I ask you something?
Yeah.
How do you differentiate between the service debt and the service internal? Because they are both kind of similar. I know that they are from two different funds, right? But how do you differentiate it if you ask on a
Yeah.
test?
Well, one is, well, you'll know by the time you get to a test, you'll know very well the difference between them. But just to answer your question or your curiosity right now, the debt service fund, okay, really the title is debt service versus internal service. The debt service fund services the debt, the general obligation debt of this government. Well, what does that mean? Service it. Well, you service debt by paying back principal and interest. So the job of the debt service fund is to pay back principal and interest on debt. The internal service fund is more like a business that's running inside of the government, which is providing services to the other governmental funds. It's not a governmental fund, it's a proprietary fund because it operates in a proprietary manner in which the other departments need a service, they're charged for that service, and they pay for that service, reimbursing costs. So GASB, the Governmental Accounting Standards Board, the entity that sets the standards, felt that that was more proprietary in nature and want to include it in the proprietary fund category. But since the customers of the internal service fund, like a motor pool, remember, I can't take my car to get it fixed at the motor pool. It's only going to fix government vehicles, police cars, fire trucks, that sort of thing. Since the customers are limited to the other governmental funds, when we get to the government-wide level, we have determined that, GASB has determined that that should be reported under governmental activities. So the debt service fund, even though they both have the word service in them, has a significantly different role, right, than the internal service fund. Question?
I got it. Thank you, Professor.
Yeah, and don't worry. I know at first, it sounds like I'm hitting you with a tidal wave of stuff here, and I kind of am hitting you with a tidal wave. But after a while, you'll become a fish, and tidal waves won't bother you. Okay, so you're gonna keep getting hit by this same wave, and all of a sudden you're like, oh, okay, I got this. So don't panic too much if you're saying, how am I gonna get all this in my head? You're going to get it into your head because I'm going to keep beating it into your head over and over again. So don't worry. Okay. All right, good. Now, our fiduciary funds, are not reported at the government-wide level. Okay. And the reason we don't report them at the government-wide level is that we're trying to show how efficient we are under the operational accountability objective, how efficient we are in operating this government. We don't use the fiduciary assets that we're taking care of on behalf of another. We don't use those in our operation. In fact, that would be a violation of our fiduciary responsibility. We're managing assets for somebody else. So we do not include those to show our operational accountability objective because we're not even supposed to be using those in our operation. But when you're at the fund level and you're sitting there and you have a fiscal accountability responsibility, meaning you're spending money for the intended purposes, whether it be through a legislation or simply because you have a fiduciary responsibility for that, then yes, then the fund financial statements category level, I should say, would include the fiduciary fund category. Okay. Okay, good. Let's go ahead then and let's take a look at how these statements will look. And by the way, guys, I think it's worthwhile pointing out right now. So here's how we're going to do things here in the early going for the class. We're going to, right now, we're at 30,000 feet, right? Showing you this overall structure. Then we're going to, in chapter 2, take a closer look at the structure of the financial statements that make up this model, or the elements that make up this model, because we'll also look at MD&A. So we're going to look a little closer at the items that make up that big picture, the 3 boxes that I showed you. And then by chapter 4, we're literally going to start to break this thing down to some journal entries. Okay, so we're still at a very high level, but I want to show you here what the statement of net position would look like. Statement of net position is the balance sheet at the government-wide level. It is a consolidated statement. We don't call it the balance sheet. We call it the statement of net position. Okay, and I'm showing you the 2 columns, the governmental activities and the business type activities, and I sort of scribbled in here. Sorry for my scary writing. I have what? I have the general fund, special revenue fund is the R, debt service fund is the S, capital project fund, permanent fund, and then I wrote ISF because for our mnemonic we just pick up the S in internal service fund is in our governmental activities column. We consolidate our enterprise funds into our business type activity column, and we do not include the fiduciary funds. We don't consolidate those at the government-wide level. Now, just to help us understand how this is a consolidated statement, I brought you down to this 1,835,000, which is the total net position of this government. Now, I should say, let me say that, let me rephrase that, cut, edit. I come down to the next slide and I show you this 1,835,000, which is the total net position of the enterprise funds of this entity, not the entire entity, just the enterprise funds. I'm in that business type activity column. It's a consolidation of all enterprise funds of this government. And I have this 1,835,000 is the total net position of the enterprise funds. That's like retained earnings. Now, sometimes I hear people say, well, net position is like the stockholders' equity section in a for-profit entity. And I challenge that because I say, well, okay, it is the difference between the assets and liabilities, or net position plus liabilities do equal the assets. So I see its relationship there, but governments don't sell stock. Governments don't have, therefore, common stock or additional paid in capital. Governments don't pay dividends, so there's really no dividend part of this. So it really is what? It really is the retained earnings, and it is only what? It is only the accumulation of the equivalent to net income that this entity has earned over the history of the life of this government. Okay, so I say it's like retained earnings, and frankly, it's only the income part of retained earnings because governments don't pay dividends. Okay, all right, good. Now you come over, and here we're at the fund level, right? This is telling you, hey, you are now looking at the disaggregated piece for the proprietary funds. There are two types of proprietary funds, internal service and enterprise funds. They're telling you that this government has what? Has two enterprise funds, water and sewer and parking. Okay. Now here we put it in the proprietary fund category because it's like a business, but unlike the internal service fund, which is just providing its services to the government, the enterprise fund has a much broader public set of customers. So that's why we include it in the enterprise fund category. It's part of the, the business type activity category here. We include it here because it's not like the internal service fund where all the customers are the governmental funds. So that's included in governmental activities at the government-wide level. Here, we're putting that under business type activities, but we're showing you the detail of what this government has in this example, which is two enterprise funds. Now, what they do is they add those two enterprise funds together. And when you look at the totals now, just going over to the next page, coming down, and you have your net position down here, notice you have that same number, 1,835,000. So it turns out that it is true that when you consolidate these, right, they roll up and they roll up to the consolidated level when you take the two enterprise funds and roll them into one category there, business type activity, the government-wide level. It works, doesn't it? Same amount for the net position, 1,835,000. Question.
Yes, what does run mean?
Run is the categories for net position. So you have to forgive me a little bit because I teach CPA review, and so sometimes I'm all about mnemonics. So the three categories for net position are restricted, unrestricted, and net invested in capital assets. And we're going to get more into that in chapter 2. And we'll really get into it even more when we start talking specifically about the enterprise funds down the road a bit.
Okay, thank you.
Okay. Okay, so we give you this definition of a fund, guys, but I think you remember this. I hope you remember this beautiful drawing that I had last time. And we said, if we have a gas tax and that gas tax is used for what? For road improvement, the gas tax would go into a fund and probably, okay, that would go into my special revenue fund. Okay, I don't know what this guy's doing over here. That would go into my special revenue fund, and then the special revenue fund's job would be to do what? Account for the revenue, the gas tax, but also what? The spending of that gas tax for what? Road improvement, road maintenance, that sort of thing, okay? This is what a fund does. So when they look at it and they say it's a self-balancing set of accounts, it makes it sound like, you know, you go home at 5 o'clock and you come home the next day and accounts that were out of balance themselves or something. Sorry, it doesn't work that way. What it means is that if you make a debit into the special revenue fund, you will also credit another account within the special revenue fund. So if you have some revenue and it comes in cash, you would debit cash, you would credit revenue, and that debit to cash and that credit to revenue is all contained in the special revenue fund. There is no such thing as making a debit in the special revenue fund and then the corresponding credit goes over to the general fund or something. That doesn't happen. Now, it could be that the same transaction is accounted for in each of those funds, but the recording of that transaction in those two funds would be self-contained debits and credits, respectively, in each of the funds to balance that journal entry. Okay. Okay, so I don't like to read this. Segregate financial resources, etc. We're going to get to that, so I think it's better for you to have a picture in your mind of what these funds do at this point rather than trying to read a bunch of words on the slide here. Okay? Okay, good. Now, when we look, we're going to have these different financial statements at the fund level that we will look at in Chapter 2 in more detail. So we'll have our governmental funds, and I'm going to talk more about the some of the information you're seeing there in a minute. Notice for our fund financial statements, we have a fiscal accountability focus. We're going to talk more about this in Chapter 2. So hang tight about some of this stuff that's highlighted. Generally, when I'm teaching this class, I would go ahead and talk about it here. But since we want to get to Chapter 2 and I repeat that stuff in Chapter 2, I think it's okay. We don't talk about the specifics here now. We'll get more into some of this in Chapter 2. Okay, but I want you to understand that you have the governmental funds, okay, and then we have the proprietary funds and the fiduciary funds. And there are financial statements, and we kind of already looked at the proprietary fund statements. There are financial statements for all of the different funds, all 11 different funds, okay? And again, you see the 11 funds and the 3 categories. Okay, and you see this again. That's just sort of to summarize where all this came from. Any question at this point? Okay, good. I've shown you that now. Okay. All right, good. So that was kind of more or less a review of what we talked about last time. So let's go ahead and start to kind of break some new ground here, where we're going to start to talk about the financial reporting entity. Now, financial reporting entity is basically saying that if you qualify as the primary government, you will have to prepare the MD&A, you will have to prepare the basic financial statements, which is the fund financial statements, the government-wide statements, and the notes thereto, and you will have to prepare the required supplemental information other than MD&A. So, do you think it's important for a government entity to know if it's a primary government? Yeah, because if you are, you've got to prepare all that stuff that we were just talking about, right? Now, what happens if you look at this criteria and you are not a primary government? You don't meet the criteria that we're going to talk about. What do? You may sit there and say, well, I still have financial activity, John. What am I supposed to do? Your financial activity will be reported on the financial reporting of the entity that is your primary government. So you look at this highly technical drawing I put here to explain the relationship between primary government and component unit. The primary government is the parent, and the component unit is the what? Child / subsidiary, if you will, of the primary government. Okay, so if you are a primary government, you're going to have to prepare that financial report. If you're a component unit, your financial information will be reported on your primary government, the one that is financially responsible for you. Okay, so generally, the financial reporting entity consists of the primary government and organizations for which the primary government is financially accountable. Those are called component units. Those are like the child. Are parents financially accountable for their children? Try having one and tell the government that you're not financially accountable for that child, and they will tell you something different. Okay, so what happens? Parents are financially accountable for their children. Primary governments are financially accountable for their component unit. So you're one or the other. If you are a government, you're either a primary government. If you're not a primary government, what are you? You're a component unit. So what makes me a primary government? Well, if I am a state, I no longer have to ask myself any questions. I'm a primary government. If I'm a state, I'm a primary government. So is the state of California a primary government? Yes. Is Rhode Island, pick a smaller state, a primary government? Yes. Okay. Then they tell us that any general purpose government is automatically a primary government and doesn't have to ask itself any more questions. Now we talked about this last time, but a general purpose government is what? Things like cities, counties that have different purposes. So city not only has public safety, they might also have what? Culture and entertainment. They might have parks and recreation. So they have a lot of several different purposes that are general in nature. And if you're a general purpose government, like a city, a county, you are automatically a primary government. You don't have to ask yourself any more questions. So we've got our states covered. We've got our general purpose governments covered. What about special purpose governments? And remember, we said that special purpose government has a very narrowly focused, unique sort of one singular purpose. For example, if you're a school district, you are going to be considered a special purpose government because your singular purpose is education, I think we said, right? Okay. So if you are a special purpose government like a school district, you have to go through a set of evaluations here to see if you are a primary government. And in order to be considered a primary government, you have to meet all three. I know it looks like four because it's a four-letter mnemonic, but it's only three requirements, and you have to meet all three of them. You have to have a separately elected governing body, meaning that what? You can't have a situation where they say the school board is automatically comprised of members of the city council. If that's the case, then that school district has failed the separately elected governing body criteria to be a primary government, and therefore it would be a component unit. But you have to meet all three of these. You have to have a separately elected governing board. You have to be legally separate from the primary government, and you have to be fiscally independent. So if they sit there and they say, well, it's a separately elected governing board, they're legally separate, but each year they must submit their budget to the city council for approval, then they are not fiscally independent. If you don't meet any one of these three criteria, you are not a primary government. If you're not a primary government, what are you? Answer, please.
You're just you.
You're a component.
Component. Component.
Just component. Just kidding.
You're a component unit. You're CU, right? You're a component unit. Good. I kind of like that though. If I'm not a primary government, I'm just me. Okay, right. Now you see why I became an accountant. Okay, so what happens? If you're not a primary government, what are you? You are a component unit. Right? Okay, good. You're CU. Good. Okay, so we will look and we will see when I look at some of the, I think I embedded a question in here. If you are having a city, and I mean, not a city, but a special purpose government like a school district, and they don't meet one of these criteria, they're a component unit, right? If they meet all three of these, then they are a primary government. You got to be one or the other, right? If you meet all three of these, you're a primary government, and you will have to prepare the entire reporting model, the MD&A, the basic financial statements, and the required supplemental information other than MD&A. Okay, so let's say you're a component unit. What are you going to do? you're going to appear on the financial statements of the primary government. Well, how will you appear on the financial statements of the primary government? And there are two methods, and I'm going to show you how you determine which method you should use in a minute. But one of the methods is discrete presentation. And under discrete presentation, what happens is the primary government displays the sum of all of its component units, of all of its children. It displays those in a columnar format right on the face of the consolidated level government-wide statements of the primary government. So notice here we're saying what? Here's our primary government. Here's our component units. What's in that column? By definition, these are what? The entities that the primary government was fiscally responsible for, financially accountable for, that did not meet all three of the criteria: separate elected governing board, legally separate, fiscally independent. There's our component units, and that is an example of discrete presentation. Now, when we see that one of the methods is discrete presentation, right? The other method for displaying a component unit is blended, but let's look at the criteria for discrete first, okay? So they tell us that discrete presentation is used when the criteria for blended presentation are not met. So what do you have to know? Well, we're going to come up in a minute, and you're going to have to know the criteria for blended. If we don't mean blended, we do what? We use discrete, okay? They tell us that most component units use discrete presentation. So it's going to be the rare case that we're going to have a component unit that meets the criteria for the blended presentation. And discrete presentation, as you just saw, means that my component unit is going to be displayed in a separate column right there on the face of the parent, if you will, the primary government's statement of net position. Okay. Now, what are the criteria for blended? The blended method is used when the board of the component unit is substantially the same as that of the primary government, or the component unit serves the primary government exclusively or almost exclusively. Who do school districts serve? Who do school districts?
Children?
The children. They're not there, you know, they don't call the board and says, "Kid, today we're going to teach you your ABCs." Although I had a colleague today who jumped on a meeting and said I was helping my kid with school, and I said, "Oh, what did you learn?" And she said the ABCs. So I don't know, maybe you might be educating some folks. I have a friend who has a son, he's 7 years old, and the kid knows how to play chess real well. I don't know anything about chess, so I'm constantly asking him, what was I supposed to do here? And he keeps trying to set the software so that I won't get beat by it, and he can't bring it down dumb enough to where I don't lose every time I play the thing. Anyway, so you might learn something from the school district these days, but that's not what they're there for. They're not there to educate the board, right? Or the component unit is not legally separate. If you have any one of these, then what? Then you will use blended presentation. And you say, well, John, show me the slide where there's blended presentation. I can't, because blended, trying to show you that difference, component unit versus the primary government or blended, would like be holding up a milkshake saying, well, here's the milk, here's the ice cream. I can't, because it all gets blended together, okay? So blended means you're gonna mix up the information in the primary government's columns, whereas component, discrete presentation, where you can actually see it there discretely in that columnar format. Most of the time you should use discrete unless you see those criteria for blended. Question? Okay, good, guys. Nobody wakes up in the morning and starts saying, oh boy, I can't wait to learn about this kind of stuff. I get it, okay? But just remember, you're either a primary government or a component unit. You got to be one or the other. How do I know if I'm a primary government? If I'm a state, if I'm a general purpose government, like a city, county, automatically primary government. It's only the special purpose governments like school districts that have to go through and say, do I have a separately elected governing body? Yes. Am I legally separate? Yes. Am I fiscally independent? Yes. If I meet all three of those criteria, I am a primary government. If not, what am I? I'm only left with the option of being a component unit. If I'm a component unit, two ways to display me on the face of the primary government's financial statements, which is what? Discrete, separate column, which most component units should use, or what? Blended if I meet any one of these criteria. Okay.
Could you give us an example of a component unit in real life?
I just did. School district.
Oh, I thought that school district were.
Oh, I'm sorry. Component unit. Yeah. I'll tell you what. Let's do this because I don't have one at the top of my head, but I was planning to do this anyway. So let's just do this real quick because I don't have one at the top of my head, unfortunately. Okay, and I'll just go for 2019. There might be 2020s might be out, but for our purposes, it should be fine. Okay, so we're going to get into the comprehensive annual financial report in a second. Okay, and there are different sections to the comprehensive annual financial report. Okay, but see the financial section, and the financial section will have the independent auditor's report. I think this is done by MGO, and that's the folks I want to have come and talk to us potentially. But then you should start to notice here, we have what? We have the management discussion and analysis. We have the basic financial statements, which is the government-wide statements and the fund statements. And then we have what? The notes. And then we have the required supplemental information. They don't call it out as other than MD&A, but we know that the MD&A is RSI, and we saw that that was the first thing, right? So I'm just showing you that in the comprehensive annual financial report, there is a financial section that lifts that basic reporting model and sticks it into the middle, okay? Now, what I want to do, since we had the question, so is come up a little bit, come down, whatever. There's never a politician that doesn't want their picture taken. Okay, yeah, MGO is the auditors. So I'm going to see if I can get the folks that are responsible for this audit to come and talk to us during our guest speaker. I think that might be helpful for us and might be interesting. Okay, MD&A. Come on, come on. I'm doing it this way because I don't want to have to save it. So
Hey, Professor. Sorry. How did you get to that page? I was trying to look it up earlier. The financial condition of San Jose.
I Googled City of San Jose, CAFR, which is Comprehensive Annual Financial Report.
Gotcha. I see it.
If you Google that, you should be able to find it. It might be a different year. I don't know. It depends on the year. What I'm trying to find, though, not very successfully. So I'm going to have to save it, I guess. And then I think once I do that, please God open. No, it never opens. I don't know how to get it to open in the PDF when I do it that way. So I always have to do it this way. Open it that way. Now it opens in the PDF software, and now I can search on excuse me,
Yes.
component unit.
I think you miss an N.
How do you spell it? C-O-M. Spell it for me.
S-N-P-O-N-E-N-T.
E-N-T.
Yeah.
C-O-M what?
P-O-N-E-N-T.
C-O-M.
P-O-N-E-N-T.
Okay, sorry guys, I can't spell. Okay, can't play chess and I can't spell. Okay, component unit. This is still all potential component units. Somewhere they call them out in the MD&A. This isn't exactly working out either. Okay,
Yeah.
so here they start calling out, for example, police and fire department, retirement plans, successor agency to the redevelopment agency of the city of San Jose.
Okay.
I mean, I think you can see why I didn't have a really available example. I mean, it's not like something that just leaps to mind,
Okay.
but it is entities that didn't meet the criteria for a primary government for which the city of San Jose was financially accountable. So they included as a component unit.
Okay. Oh, like the airport. Oh my God, the airport. Okay.
Yeah, so I don't have, you know,
Interesting.
it's not like it's, oh, so component, so you mean Safeway is a component unit. You know, unfortunately, I don't have something like that. It tends to be these kind of not, you know, household name type entities that, you know, that tend to be component units.
Okay, great. Thank you.
Yeah, but any
Professor?
city would list them out there. Uh-huh.
Oh, I was just wondering who uses these CAFRs? I would like to say the voters, but I don't think they
Yeah,
use them.
you do, citizen. Okay. What GASB has told us is the primary users of this information are the citizens. So they've given you a homework assignment, whether you knew it or not, okay, whether you took this class or not, you already had this homework assignment. Now, of course, that's nonsense. I mean, you know, come on, guys, we're learning that, you know, a good chunk of the public doesn't even know what the three branches of government are, right? Okay, so, you know, the chances that your average citizen sitting at, you know, having a beer over at Chili's is going to say, you know, hey, Bob, let's look at the CAFR today. Okay, I mean, that's not going to happen. Okay, so the reality is the people that really use those are those that are investors in state and local bonds. Okay, they tend to be the individuals that would actually get into this, start to take a look at this kind of stuff. And the reality is they're going to be interested in things like the MD&A, and they're probably going to be interested in things like the required supplemental information other than MD&A. And then we're going to learn that the CAFR actually has three sections to it: the intro section, the financial section, which, as we've seen, includes the MD&A, the government-wide statements, the fund financial statements, and the notes there too, and the required supplemental information other than MD&A. And then there's a third section to the comprehensive annual financial report, which includes, the third section is called the statistical section. And the statistical section starts getting into revenue per capita and their tax base, and starts looking at, you know, trend data for 10 years, on and on. And that's probably more where those investors, underwriters, whatnot of state and local debt, bonds, that's where they're going to really do a lot of their analysis. But the official answer from the GASB is it's the citizens are the primary users. But really and truly, the people that really are going to do it are those that are involved in, government securities. Okay. And those statements are audited, right? I mean, so if we were looking at the federal government's annual report, okay, the agency that tries to audit the federal government's financial statements is called the Government Accountability Office, okay, where I used to work, and I'm trying to find the audit opinion again. But that is a real audit opinion where the auditors came in and they give something called an unmodified opinion. Okay, where is that? Now I gotta find it again. Anybody know what page?
I probably just search it on there for.
Let's try MGO and see if we get lucky. Okay. Yeah. Okay, this is the auditor's report, and it is what? It is an unmodified opinion, okay? And your state and local governments will get unmodified opinion. If you were to look up the federal government's financial report, what you would get is a disclaimer of opinion from the GAO, the Government Accountability Office. And GAO has been trying to get those financial statements audited since 1997. I don't know if you can see the date on it. I got this piece of plastic because I was involved in trying to get that thing audited. See, you can't even stand up. We were trying to get these consolidated statements audited, but the government can't make its balance sheet balance. Now, why can't it make its balance sheet balance? Well, the problem is the consolidation process is screwed up. They have two different systems, one preparing the consolidated, and then they have, 32 agencies doing their own thing, preparing their financials, and then they try to get them to match up at the end. That never works, okay? In any system, we're gonna have two levels of reporting, agency level, fund level, in the case of state and local governments, and government-wide level. You start at the fund level, and then you consolidate to the government-wide level. You don't have two separate systems and then somehow try to make a match, and you can't at the end. So the balance sheet doesn't balance, not because the government has deficit, but because they can't figure out the difference between the two systems. So at the end, on the consolidated level, they end up plugging about $3-4 trillion. And as the auditor of record of those financial statements, you sit there and say, well, we have to disclaim. We can't give an opinion because of that major problem. Plus, they can't seem to get a good audit on Department of Defense. And the reason they can't get a good audit on the Department of Defense is because the Department of Defense is good at blowing up other people's assets, but they're not good at telling you where their assets are at any point in time. So they can't get a handle on the fixed assets for the Department of Defense. And often a disclaimer at the subsidiary level will bubble up into a disclaimer at the government-wide level. So there's a few reasons why GAO disclaims. You're saying, well, John, why are you showing me this award then if you guys couldn't even give anything other than a disclaimer? I did my part, okay? I led the audit of the auction issue cycle of the public debt. So the $20 trillion of public, it was only 5 trillion then, but it's now 20 trillion, 30 trillion. I have trouble keeping up. It goes up 10 trillion every president. Every president adds 10 trillion to it. Okay, so it took Obama 8 years to add 10 trillion. It took Trump 4. It took Bush the father, a while to add about 1.5. It took Clinton's, 8 years to add 1.5. So they all add to it, okay? And we were able to audit the public debt. So we got that public debt number audited, but there were these other issues that, they couldn't get to. And so there's a disclaimer, but there has to be, no state or local government would be able to survive if they didn't have this unmodified opinion on their financial statements, because they have to go into the debt markets and they have to compete with other debt securities. The federal government, right, runs deficits and huge debt. I just said 30 trillion. And yet for some reason, the world comes up and says, let me buy your securities. Now, why does the world do that? Because the world knows that if you put, well, the world knew and still thinks, I guess, to a certain extent, that if you put your money into US Treasury securities, that investment is safe. There's not going to be some sort of turmoil where there's going to be an overturn of the government and then somehow you're going to lose your investment. Now, I don't know how long people would continue to think that if something horrible happened, like a bunch of people stormed the Capitol and said that they were going to kill the leaders of the federal government. If something like that happened, then maybe people might lose faith in buying treasury securities. So until something like that happens, I guess folks won't lose faith in the federal government. So even though their financial reports are disclaimed on, people are still willing to invest because they perceive that as being a safe haven for short-term, investments such as 30, 60, 90 day, 180 day, 360 day T-bills. Okay. All right. More than you asked, but I think the answer to this question was, I don't have a good example of a component unit because they're not things that just leap to mind.
I'm guessing also it's hard to audit the government because you would need a lot of security clearances to be issued since there's stuff.
Well,
I guess there's stuff they don't want everybody to see.
It depends on two things. One, what you're auditing. Three things. What you're auditing, the level of clearance for the individuals that would be looking at that, and three, what you're auditing, the level of the clearance of the individuals and the materiality of what it is that you're looking at. How big is it, right? You could have something that's kind of secretive, but if it's not a material aspect, you could get around that, okay? If there's something that's material and it needs to be looked at, you certainly can get individual auditors to have clearance that is as high as the type of clearance that they give military. So anyone who comes to work in the federal government is automatically going to have to clear a secret clearance. Secret clearance isn't that great. I mean, you just tell them to talk to people that won't rat you out for anything dumb you did. When I was at the GAO, you have to redo these every 15 years. And so there was a bunch of guys that I came in with that all of our secret clearances came in at the same time. And we basically just pointed to each other as the people that should be talked to do our secret clearance. As you go up the line, it goes to top secret. And then for military type things, for example, they wanted me one time to go work at Lawrence Livermore Lab, which is the entity that the federal government, it's a part of UC Berkeley, I think. And it's the entity that the federal government contracts with for all their development of defense projects and that sort of thing. And they wanted me to go over there and work because Congress was asking us to look at how good of a job they're doing in maintaining their security over the records and stuff. So they said, John, you should go over there and work on that. All you got to do is get a Q clearance. Well, what's a Q clearance? Well, Q clearance, they're going to figure out anything you ever did wrong. And if you did something wrong, they're going to know about it. So I said, well, I don't want that. No, thank you. I don't want people going around and digging up, everything I ever said or did, in my youth. In order to get a Q clearance, I'll stay here with my secret clearance, and I'm fine auditing things like the public debt, which don't involve a security clearance. So you can get around that. The reason for the disclaimer is not because there was something secret that they don't want to let auditors look at. It's because they can't get their shit together. Can I say that? You know, they can't make the balance sheet balance because they refuse to sit there and come up with the proper process, which is because it's too big. What you'd have to do is you'd have to get the 32 agencies to all get rid of their individually siloed accounting systems and all get on one, you know, general ledger system, not even a general ledger system, accounting systems that are one system. And then you could prepare all that financial data at the agency level in that one system. And then you could do a proper consolidation, which is to do what? Do your eliminating entries and whatnot to create a consolidated, the way state and local governments do it. Instead, they've got 32 systems, and then they got one consolidated. The consolidated financial statements spit out, and then they spend a bunch of wasted time trying to get the two things to meet, and you know that doesn't work. So there's always some things that they can't figure out why it's not reconciling, so they plug the difference. Auditors cannot accept a $3 trillion plug and give an unqualified opinion. That then unmodified opinion, that then translates into disclaimer, and the fact that Department of Defense can't seem to get its asset management system together. And so as a result, the auditors of Department of Defense, and I think might be one of the big four firms, I think it might be KPMG, disclaims an opinion on the Department of Defense. And because they disclaim an opinion on the Department of Defense, that bubbles up into a disclaimer on the consolidated financial statement. So the GAO has to disclaim for that reason as well, Government Accountability Office. GAO is called out in legislation that GAO, the Congress's auditors, will be the auditor of record for the consolidated financial statements. It's legislatively mandated. However, GAO is also called out to be the auditor of record of IRS and public debt. IRS, because IRS would be the heavy hitter on the income statement of the consolidated financial statements, right? The revenue piece, and the public debt, because that's the big hitter on the balance sheet of the consolidated. So GAO has gotten the audit on the IRS and the public debt, but there's other pieces of that consolidation that, I don't know, someday when I'm in heaven looking down, I'll go, oh, look, they figured out how to audit the financial statements. Isn't that wonderful? Okay. End of speech. Any other questions? Good questions, guys. Okay, good. You want to keep going or you want to break?
I just want to get this over with today. So.
Oh, gee, thanks. What, are you being tortured?
No, I just had a long day with work, so I was like, might as well just finish me.
Okay, well, I don't know that we're going to get out any earlier, but okay. We can keep going. Is that what everybody else is? Yeah.
You can do a poll, right?
Yeah, no, that's fine.
Keep going?
Yes.
Okay.
Yes.
Okay, all right, we can keep going. Okay, good. So just coming back now to what we were talking about, you have your component units there. That's the example of discrete presentation. That's the point of that slide. Okay, okay, good. So let's come over and let's take a look at this one. And you can kind of see the answer here. I've already chose the answer for you. So South City School District has a separate elected governing board that administers the public school system. The district's budget is subject to approval of the city council. The district's financial activity should be reported in the city's financial statements by, first question, do we have a primary government or a component unit? and why?
The primary component, primary, because we are an elective government body.
Okay, we've got to vote for
I
primary.
was gonna say it's a component unit because it doesn't meet all three of the conditions.
Good. Okay, good. It is a component unit because what?
It has to, the budget
Go
has to
ahead.
be
No, go
approved.
ahead.
Because
Huh?
the budget has to be approved. It's not fiscally independent.
Good. Okay, the district budget is subject to the approval of the city council. That means it's not fiscally independent, so it failed one of the self criteria. So it is what? It is a component unit. And so I know right out of the gate here, it's what? Well, there is no either blending or footnote. There is no only footnote. It's either what? Blended or discrete. And when I looked at this question, I saw none of the criteria for blended. It doesn't exclusively serve the governing board, none of that. And it tells me it has a separate elected board, so the boards aren't substantially the same. So it didn't have any of the criteria for blended, so the correct answer is discrete. Question? Okay, good.
This is separate, but I Googled who did the audit of the DoD. It was 5 auditing firms. It was quite a bit.
That's weird. I mean, if there were 5 firms involved, but only one can be the consolidated auditor. So you have component auditors, and then you have. So there might have been 5 involved, but there should be one that should be the primary auditor. But who was it, if you don't mind, the 5 you saw?
Cotton and Company, EY, KPMG, Grant Thornton, and Kearney and Company.
Okay, yeah. I don't know. I'd have to look more closely. It seems to me like one of them, though, is the primary auditor, is the way that generally works. And then you have component auditors that would pick up pieces.
Yeah, it was apparently the biggest audit ever done in the history of everything.
Did they give him an unmodified opinion?
Let me.
I was reading that it was a culmination of 21 different individual audits, and only 5 out of the 21 had an opinion.
Well, right now it says 9 unmodified opinions, 1 qualified opinion, and 14 disclaimers of opinion. So yeah, it sounds like it was all individually done.
Are you confused? Yes, you should be. That's what they wanted you to be confused. Okay. If you pick up the GAO's report on the consolidated, which how can they be the biggest if they're part of something that they fold into, but whatever. I bet you GAO calls out, well, we had to disclaim it being on the consolidated because the Department of Defense is a mess. But anyway, interesting. Okay. Thanks, guys. Thanks for giving me, now you know what humors a government accountant, right? Guess what the Department of Defense said in their own report? Ha, ha, ha. Okay. All right. Now, we, to a certain extent, have already looked at the comprehensive annual financial report for the city of San Jose, but let's see how that is discussed here on our slides here, okay? So we have what? We have 3 sections to the comprehensive annual financial report: introductory section, financial section, and statistical section, okay? Introduction section, and we saw some of that as we scrolled through the city of San Jose's report, has a title page, a contents page, a letter of transmittal. In the letter of transmittal is basically saying, hey, the executive branch, the mayor's office is transmitting this to the legislative branch, the city council, okay? And then other as desired by management. Remember all those pictures? So they can provide an organization chart, pictures of the state, the city council, state legislature, whatever. Okay. Then you have the financial section, and we saw MGO's audit report, and then we saw what? MD&A, basic financial statements in the notes there too, and the required supplemental information other than MD&A. We didn't look at them specifically, but you saw them in the table of contents. So again, well, not again, I kind of jumped into this a little too quick. Comprehensive annual financial report is an optional document. They don't have to provide it. It's an optional document. They are not required to provide it. But almost all state and local governments choose to prepare a comprehensive annual financial report, because if they do, and they follow specifications laid out by the Government Finance Officers Association, the GFOA, then if that's the case, then they receive an award from the GFOA. Now, sometimes students will say to me, well, look, John, who cares about a stupid award? I'm not going to sit here and worry about an award. Well, let's say you work hard and you're interested in government, you work hard and get yourself all the way to the position where you're the chief financial officer for the city of San Jose. Are you then, you've got political aspirations maybe even in doing that, because if you understand what goes into the preparation of these financial reports, you know a lot about that city. So you may even be saying, I should be sitting on the budget committee of the city council, and I'm going to leverage that into mayor of San Jose. San Jose is one of the biggest cities and most important cities in the country. I'm going to leverage that into someday I may become governor of the state of California. Someday I may be the president of the United States. Okay, so you might use this as a leverage up to higher political aspirations. So what happens? You're not going to say, oh, okay, well, I don't want the GFOA award. So you're going to prepare your comprehensive annual financial report following the guidelines of the GFOA, which says there'll be an introductory section, there will be a financial section, and GFOA, Government Finance Officers Association, tells us that that financial section will basically be what GASB has required for all state and local governments. The Governmental Accounting Standards Board has said if you are a primary government, you will provide an MD&A, the basic financial statements, and the required supplemental information other than MD&A. So you take what's required, lift it, and stick it into the middle of this optional document, the Comprehensive Annual Financial Report. Question. Okay, so what's required is what's on this slide. This whole introductory financial section, statistical section contained in Comprehensive Annual Financial Report is optional. Okay. Okay, good. And then certain combining statements, etc. This is not necessarily required by GASB, but if you did have this kind of stuff, you chose to have this kind of stuff, then it would be contained in your financial section of the CAFR, the Comprehensive Annual Financial Report, if you chose to prepare a Comprehensive Annual Financial Report. Okay, so I'm showing you again that middle section of the Comprehensive Annual Financial Report is basically this model, right? Okay, then you have the, we talked about the MD&A. I don't quite understand this picture because I think this guy has this thing turned the wrong way. He should turn it the other way if he's trying to hear her better, but whatever. Okay, she's telling him about this government, and we'll talk more about the MD&A when we get into chapter 2, which I don't know if we'll get to it today or not, at the rate we're going. Okay, yeah, we should get to it. Okay, and then the statistical section, and the statistical section is everything you would want to know about this government. Tax base, tax for the last 10 years, trends in taxes, Things like tax per capita. I mean, they go on and on and on, and I'm not going to bore you with scrolling through that statistical section of the Comprehensive Annual Financial Report of the City of San Jose. You'll see that it goes on for pages and pages. The key thing is to know that it is not required by GASB. It is what you would have in your Comprehensive Annual Financial Report as required by the Government Finance Officers Association, GFOA. Okay. Okay, good. Which of the following statements about the Comprehensive Annual Financial Report of a government is true? That means there are 3 lies here and 1 truth. Okay, so what I'm going to do is give you 30 seconds to go ahead and answer this. And I can't put the poll up yet because I haven't created a poll. So I'll give you 30 seconds and then let's see what you think. Okay, which of the statements is true? Is it true that statistical tables may not cover more than 2 fiscal years? No, we said, okay, we said that what? Could be 10 years worth of data, right? Statistical tables may not include non-accounting information. They have all kinds of things in there, guys. They have stuff about, you know, operational aspects of the government, et cetera, in there. The statistical section is not part of the basic financial statements. Is that true?
Correct.
Yeah.
Right? That's the one that's correct because it's down there in its own section, right? The statistical section. The basic financial statements are up there as part of the financial section. Okay, good. Okay. It's not an integral part of the basic financial statements. Okay, good. Question. Okay, I'm going to go ahead and use my discretion as the teacher of this class and say we're going to take a quick break. Why don't we go ahead and take 10 minutes, okay? And then we're going to go ahead and we're going to look at the practice midterm for chapter 1, okay?
Thank you, Professor.
Mhm.
So back at 3:10 then?
Yeah, 3:10. Yeah, 3:10 is fine. I'm going to pause the recording. Somebody remind me to start it up again, please, when we get back. There we go. Perfect. Thank you. Okay, so let's just go ahead and take a look. And guys, don't get confused. You see these chapter 1, chapter 1, chapter 1, because these are all chapter 1. Okay, I used to put it all in one big file, and then one day I got some energy and I went ahead and broke them out by individual files. So all of this is chapter 1. Now, it's important when you look at this to realize that this is just chapter 1. When you get on your midterm, obviously I'm not going to have 30 questions about chapter 1. So sometimes students look at this and they think, oh, okay, this is all he's going to ask me. No, I'm going to ask you on the midterm, maybe 1 or 2 questions, frankly, from chapter 1, but more questions from chapter 2. And chapter 4 tends to be the one that is heavily tested on our first midterm, right? Okay, so, but this right now gives you a sense as it relates to chapter 1 material, this is the type of thing I would ask you. So the Governmental Accounting Standards Board is the primary standard setter for not all governments. It's what? State and local governments. It does not set the standards for not-for-profits. Who does that? That's FASB, right? Okay, so B is the correct answer here. Stop me if there's a question, guys. I'm going to roll in this. Which of the following is the most authoritative source of accounting standards for cities and counties? I don't know why there's a space there. GASB, right? Governmental Accounting Standards Board set the standards for cities and counties, all state and local governments. Which of the following has the highest level of authority for a government in the governmental gap hierarchy? Again, GASB, not the FASB. They set the accounting standards for not-for-profit, all private sector, for-profit and not-for-profit, but not state and local governments. Okay. Number 4, which of the following organization issues standards that are authoritative for state and local governments? The GASB. Okay. Now you look at this question, it's kind of like somebody saying, you know, who's your daddy? Okay, you're my daddy, GASB. I get it. Geez, you know, how many times are you gonna ask me this? So when we're sitting here and you see that many questions that seem like the same question to a large extent, that's just getting you ready for the one-off that you might have on the actual midterm where I would ask that, okay? Number 5, the American Institute of Certified Public Accountants, that's D, number 5, sorry. The body that has been established to recommend accounting standards and federal reporting standards for the federal government is the Federal Accounting Standards Advisory Board. So for federal government, it's FASAB. So when Department of Defense, the Consolidated Financial Statements prepare their statements, they follow FASAB. They don't follow FASB. They don't follow GASB. They follow FASAB. And FASAB is made up of, did anybody look that up? I'm not sure. I think there's 7 members of FASAB, and there's 3 permanent members, a representative of Treasury, Office of Management and Budget, and representative of the GAO are the permanent members of the FASAB, and then they rotate 4 other agencies in and out. Number 6, the Financial Accounting Standards Board is what? Is going to be not-for-profit organizations that are not part of the government. And the reason we say that non-governmental not-for-profit, because certain state and local entities like colleges and universities are considered governmental, and then they put the tag on their not-for-profit. But the fact of the matter is that a governmental not-for-profit entity follows all the same accounting that we're talking about here in our first 8 chapters. If you're a non-governmental not-for-profit, like a private college like Stanford, then you're going to follow the FASB requirements for not-for-profit entities. Number 7, which of the following is not an objective of financial reporting by state and local governments? Which of the following is not an objective? You can see the right answer. So to make this interesting, let's start from the bottom of D. To assist in determining compliance with finance-related laws, rules, and regulations. We looked and we saw that what? We are going to be looking at our compliance with laws and regulations in this class and see how fund accounting helps us to stay in line with those laws and regulations. So if the state says, if the law says that I can only spend $1 million on road improvement, $1 million of gas tax on road improvement, I would create a special revenue fund that would allow me to do what? See that the government spent $1 million on road improvement. So that absolutely is an objective of the governmental accounting. C, to assist the financial reports in comparing actual results with the legally adopted budget. Spend $1 million on road improvement. Did you spend $1 million on road improvement? Yes. And so we can see, and we'll literally have budgetary to actual comparisons that are part of our required supplemental information other than the MD&A. To assist users in assessing the financial conditions and results of operations. We said that on one of the slides last time. Financial condition, that's why we have the statement of financial condition. Results of operations, that's like the income statement, and we do prepare for all of our funds and government-wide, we prepare both a balance sheet and an income statement. So yeah, absolutely, that's something that we're trying to achieve. A, to assist in assessing the adequacy of system of controls. That is not an objective of our governmental financial accounting and reporting. How about for-profit entities? Do for-profit entities provide information that would assist users in assessing the adequacy of their systems and controls?
Yeah.
What do you call it?
Internal controls.
Yeah, but what do you call that assessing the adequacy of internal controls?
Oh, an audit?
Audit report?
Huh?
The audit report?
Well, the governments get audit reports, don't they? We saw
Yes.
one, the MGO report. Okay, so
Are you talking about like what the audit report is, like an integrated audit of both financial statements and internal controls?
excellent. The integrated audit under Sarbanes-Oxley, the auditor provides assurance on internal controls, don't they? Yeah?
Yes.
Yeah.
Okay, good. All right, excellent. So why not government? Why doesn't the government require that when an auditor like MGO come in, that they also provide assurance on the internal control? Why? This question is telling you that must not happen, and I'm telling you it doesn't. But why doesn't it happen? Why doesn't MGO have to give an assurance on the internal control of, say, the city of San Jose? Why?
Paraphrasing you earlier, they don't have their shit together.
Very good. Yeah, that's finally a good way to articulate the answer, because they don't have their shit. They lack courage. They don't want you knowing that they don't have their, you know what, together. And so they don't require that state and local governments issue a report, an assurance on their internal control. The federal government doesn't have such a requirement, yet they got the nerve to get up in the face of private industry and say, well, you have to have this. Okay, so that's just the reality. Yeah, I don't know why they don't have it. There was a report from the that was issued from the Association of Governmental Accountants that, and this was like 10 years ago or something stupid, in which they said, oh, well, we should explore, you know, this is how they always handle everything. They pass a law that says they'll explore possibly doing something in 20 years from now, right? Okay, so there's no reason for them not to do it other than they're just afraid. Okay, but so there is no internal control report that like what you see, internal control assurance, like what you see for private companies in government, anywhere in government. Well, I shouldn't say anywhere in government. Here we go. The federal agencies under certain OMB guidance can ask their auditors to do such an audit, but it's not required. Okay, they can ask their auditors to do it. And some agencies do, but I think most of them run for the hills rather than do that. And I don't know of that happening at all at the state and local level. Okay, all right, good. Number 8, a comprehensive annual financial report prepared in conformity with whoever wrote this question. And I leave it there like that, guys. You say, well, why don't you just take that out? And the reason I don't take it out is so that you realize that your textbook providers, to a large extent, don't know what they're talking about. And so I'm going to be doing some things that are different than the textbook, which we're not going to use anyway. So maybe the speech is dead on arrival. But I would generally tell the class, I will say some things that are different than the textbook because the textbooks are dumb sometimes and have dumb things in there. The GASB does not talk about what goes into the Comprehensive Annual Financial Report. It is the Government Finance Officers Association, GFOA. I was going to try to get GFOA's textbook to be used in this class, and they dropped the ball. They couldn't figure out how to get me access to the electronic book and stuff. It's just been in trouble. Anyway, so GFOA, though, is the entity that talks about what should go into the Comprehensive Annual Financial Report. So according to their guidelines, GFOA, which of the following sections would we see? And it is what? We saw it. We saw it in San Jose State's Comprehensive Annual Financial Report. We saw it on our slides, right? Which is introductory section, financial section, and the statistical section. Okay. Stop me if there's a question, guys. Which of the following should be included in the financial section of the Comprehensive Annual Financial Report? And that financial section does what? Lifts up that basic GASB reporting requirement, which is what? MD&A, basic financial statements, and required supplemental information. Other than MD&A, so even though they're only talking about the middle box here, that does appear in the financial section. The transmittal letter is in the introductory section. That was that long thing that I was kind of scrolling through at the beginning, trying to find the component unit information. Tables and charts, that's where. Tables and charts showing demographic information is in the statistical section. A description of the government, that's what we were seeing in the MD&A. So City of San Jose says, hello, I'm the City of San Jose, blah, 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 blah. And my component units are those sort of, you know, boring names of component units that were listed there. They do describe themselves in the MD&A. Okay, number 10. On what should the government-wide financial statements report? Okay, and this is government-wide statements. So government-wide statements are going to report the net position, that's the balance sheet, and the results of operations, that's the income statement. We said that, you may not remember this from last time, that we did say that the government-wide statements report, if you want to go back to some of those earlier slides. In fact, I think I left chapter 1 open, so we can actually quickly go back, because that was last time, so you might have forgot that. Okay. Right here, government-wide statements do what? Report on the government's net position. That's the balance sheet. Change in net position or results from operation is the income statement, right? And I think we said that last time. And so you can see that this question, you know, covers that. So when we're going through the practice midterm together, you may say to yourself, wow, where'd that come from? Everything that I give you in your exam will either come from the slides or the practice midterm. I do not pull anything out of anywhere else and all of a sudden slap it on your exam and say, well, it was in the book. Not my way of doing things. Everything I give you, we will have practiced with. Okay. I'm not going to ask you questions about the public debt in the test, even though we talked about that, right? It's going to be what? It's going to be things that were on the slides. And most of the things that are in the practice midterms were also talked about in the slides. Every now and then, I'll teach you something from the practice midterm. And if I do that, I'll alert you to that. And then that could potentially be fair game for the exam. Okay. On what should the government fund financial statements report? since I think we're up there close to where that was talked about, let's find that. They are going to report on, maybe we weren't as close as I thought, fiscal accountability, right? I even highlighted that, and then it turned into a question on the exam. And we'll talk more about that in chapter 2 here. Okay, fiscal accountability says, are you spending the money for the intended purpose? That's the focus of the fund financial statements. On what should the governmental fund financial statements report? Fiscal, we saw that. Okay. Is that it? Okay. All right. Any questions? Okay. I think you're getting a feel for the rhythm of things now, right? We're going to go through the slides. We're going to talk about this stuff. We're going to see how those slides translate into a practice midterm. Practice midterm will then build up to the actual midterm. Okay, so where am I? I want to go to the chapter 2 slides if there are no objections. Let's go ahead and jump into chapter 2. All right, so now you're going to hear some things repeated a little bit, right? And some of that repeating is probably more relevant if we had, you know, if it was a class meeting after we went over chapter 1. So you'll hear some deja vu, some things over again. But now we're going to start to get past that sort of 30,000 feet. And now we're going to start to take a little bit more closer look at the terrain. So now we're going to really start to dig a little bit more into the basic financial statements, dig in a little bit more into the MD&A. By our next time, when we start getting into chapter 4, I'm literally going to start talking to you about journal entries. Okay, so we're building it up here. GASB, what do they do? What's the big picture? Now looking a little bit closer at the financial reports. Okay, so let's just go ahead. And we know that we have the government-wide statements and the fund statements. That's right. I have to show you these for a little while out of slide mode, guys. I think you can see it okay because my highlighting doesn't show up when I'm in slide mode, slideshow mode for some reason. And then at some point here, I'll switch back to slideshow mode. So bear with me for a second here while we're out of slideshow mode. Okay, now the government-wide statements are aggregated. The fund financial statements, they're the consolidation. Can you put that up there? Okay, so we take the fund information and we do what? Consolidate it, okay, into the government-wide statements, right? The government-wide statements are disaggregated and they provide additional detail about this government. And I even wrote that on one of our slides in chapter 1. Okay. All right. If it's the government-wide statements, as we said last time, we use the economic resources measurement focus. We use accrual basis of accounting, and we have an operational accountability focus. So we're looking more at the effectiveness, efficiency of this government in providing services. Okay, but we are using accrual basis of accounting, and you know that the accrual basis of accounting is what? If I purchase an asset, since that has future economic benefit, I debit asset, and even though I maybe haven't paid for that yet, I still will recognize that asset and I will credit what? Say accounts payable. Right? I don't wait until I pay cash for that thing under the full accrual basis of accounting. And then of course I will depreciate that asset, etc. You've known this for a long, long time, right? That's what we mean by accrual basis, economic resources, because I do what? I literally keep track of my economic resources and keep track of how I allocate that future economic benefit to each period in the form of depreciation. That's what all that is saying. Okay, that's what those words mean. Okay, then what? Then we have the fund accounting, and the funds provide more detail. We've said that again. Okay, Now, when we look at the funds, we have what? 3 categories of funds: governmental, proprietary, fiduciary. Our governmental funds use something called modified accrual basis of accounting, and they use the current financial resources measurement focus, and they have a fiscal accountability focus. Is money being spent for its intended purpose? Now, let's go back to our little drawing. As you can tell, I'm a frustrated artist, right? Because I keep trying to draw. Okay, and I'm not very good at it. Okay, but there's our road, and we set up, and we said it would probably be as a special revenue fund, one of my governmental funds. Yes, yes, it is, John. Oh, okay, good. So my special revenue fund, and I have what? I have a gas tax. And I use that special revenue fund so that when the money comes in from the gas tax, I guess I'll write that over here. Okay, the money comes into the special revenue fund, and then I what? Use that fund to account for how that money is then being spent on road improvements. So what's happening? I'm using a fiscal accountability focus. I want to see that money is being spent for the intended purpose in compliance with the laws. I'm supposed to spend $1 million on road improvement. This fund, this governmental fund, special revenue fund, which is one of our governmental funds, helps me to do that. With me so far? Now, what happens if this government buys a what do they call that thing? A steamroller, when they're, resurfacing the road. They have this big tractor with a big wheel on top of it, and it flattens the pavement after they lay it, right? It flattens the tar or whatever it is they use to put in a road, right? What happens if this government spends $1,000 cash on this steamroller? What should I credit? The government spends $1,000 cash. What should I credit?
Tax money, taxpayer.
Yeah, you're gonna credit like your cash or whatever account you drew from.
Stop. I didn't say anything else. If I spend $1,000 cash, I credit cash, guys. Come on, we're not going to mess you up that bad in this class. If the government spends $1,000 cash, I credit cash, right? Okay. The interesting part of that question, or for that journal entry, is what do I debit? Okay, now I'm going to debit expenditure. Now that should feel a little bit creepy to you. The credit is to cash, that felt good. The debit is to expenditure, and that feels a little creepy to you because you're sitting there saying, wait a minute, we're supposed to debit asset, equipment when we buy something that's of a long-term nature, like a big truck, and we may use that for several years. Why are we debiting expenditure? Because the focus of our governmental funds is fiscal accountability. Can you demonstrate that money was spent for the correct legal purpose? And if we spend $1,000 on a steamroller, we can now demonstrate that we spent $1,000 of this gas tax on what? On road improvement. We've achieved our accounting objective, and so we just debit expenditure. This is the classic example of modified accrual accounting. There are several differences between full accrual and modified accrual. Probably the most challenging for us will be revenue recognition rules under modified accrual versus full accrual, which we'll get into in chapter 4, part A. But in this class, one of our challenges when we're talking about governmental accounting is to understand differences between modified accrual, which is used which is used by the governmental funds, versus full accrual gets used at what? The government-wide level. So when we're dealing down here in this disaggregated fund, the governmental funds anyway, we'll use modified accrual, and it's going to be part of our job to know how to convert the modified accrual information at the fund level to full accrual information at the government-wide level. That's one of the things we'll have to do. So if you were trying to make an adjustment to turn this journal entry from modified accrual, the way it is now, to full accrual, what would you do? So let's say I have a worksheet, and in my worksheet, I have my fund financial statement. I have a journal entry I'm going to make in my worksheet, and then that's going to extend over to my government-wide statements. What entry would you think you'd have to make in that adjusting entry column to convert a set of fund financial statements using modified accrual to government-wide statements using full accrual?
Would you have to back out the expenditure with the credit and then debit like a asset account?
Good. I would credit expenditure, and I'm just saying on my little worksheet, right? That's going to help me affect the consolidation. I mean, I'd also be eliminating inner government transactions and stuff like you do in a consolidation, you know, in a private sector setting. So I would credit expenditure and I would debit equipment, right? Okay, now we're not going to get to that till later, but I am going to expect you to kind of understand, and I won't make you do a full-blown consolidation, but I may ask you one or two questions that would probably be on midterm 2, where I would expect you to be able to tell me what would be the journal entry to convert modified accrual statements to what? To full accrual statements. In other words, my governmental funds to my governmental activities column on my consolidated statements.
Can I ask a question about this?
Yeah.
So since we're, in theory, we're only doing consolidations at the end of any given period, right?
Yeah.
So interperiod, we don't have an accurate account of our, in this case, our assets, our equipment.
We would have to have some accounting as to what the nature of our expenditures were, so we would know which expenditures should stay as expenditures,
Yeah,
and
okay.
which ones should be classified as assets. So we would need an accounting system that would absolutely allow us to do that.
Okay.
So probably what they would use is a journal voucher system. That a journal voucher system basically has codes on certain transactions, and it would be coded as such that even though it was labeled as an expenditure, it was an expenditure, you know, and the code would be something esoteric, but expenditure hyphen equipment, right? So that then when we go to affect the consolidation, those are the ones that would be labeled for this kind of entry to convert them from expenditure to equipment. If it was money that was spent on salaries, then it would have a code on there that would say, hey, leave it as an expenditure, although we changed the title to expense on our government-wide statements, because expenditure is a modified accrual term, expense is an accrual term. But assuming there was no difference in the recognition rules between modified accrual and accrual for that particular item, which salaries often would be that, then that would stay as an expenditure and the code would label it as such. Does that kind of answer the question?
Yeah, very thoroughly. Thank you.
Yeah, sure. Okay, but yeah, it's not like we can just go around debiting expenditure and then afterwards say, oops, which one of these were for equipment? They'd have to have some accountability in their accounting system to do this. What doesn't happen, and that's why I get another reason I get upset with the book says there's a dual track system. It envisions two general ledgers, a general ledger at the fund level and a general ledger at the government-wide level. And I'm here to tell you that if a government does that, it becomes a mess. And how do I know? Because that's what the federal government tries, and it doesn't work because you can't get the two systems to line up for some weird reason. When you get, imagine how hard it is to keep track of one general ledger, let alone having two general ledgers, and let alone trying to get them to talk to each other so that they agree at the end of the day. So government, the federal government can get away with that because it doesn't matter how often they get a disclaimer on their opinion, everybody still lines up to buy treasury bills, notes, and bonds. If a state or local government tried to survive with a disclaimer of opinion on their financial statement, let's say City of San Jose got a disclaimer because they couldn't balance their government-wide balance sheet, everybody would go, okay, thank you. We're not going to buy any of your municipal bonds. Next city, and they'd go and buy it from another city. So state and local governments can't play that game. So they've got to be thoughtful on how they do this. They start at the fund level, they make their journal entries, and then they convert to the government-wide.
Why did the federal government come up with that two-book system where they just compare at the end?
Because there was no such thing as consolidated financial statements until 1997. There was no consolidated statements. All there were individual agency statements. And then they passed legislation in, I want to say it was 1995. Somebody Google CFO Act. And in the CFO Act, they said, okay, now the federal government has to prepare a set of consolidated financial statements. Maybe it was 1990 was the CFO Act. And they gave them so much time to ramp it up to where they would be able to get their system together to be able to issue a set of consolidated statements. And they haven't been able to do it. It's 1997. Were you guys born in 97? A person could have,
Yeah.
were you? Okay. I was going to say a person could have had a baby and the baby could be in college now. And they still are trying to get the, it's easier to raise a child than it is to come up with these, create and have a child and put them through college than it is to, that's why I said, I'll be dead and I'll be up there going, hey, look, God, they finally got the consolidated statements done. Maybe, I don't know. I don't know that they'll ever get there. It starts to become politics. I guess it won't matter until something bad happens as a result of not having these. This is how the federal government works, right? Wait till there's a disaster, then we'll do something about it. One of the things that I keep saying is what happens if the vaccine doesn't work? What happens if we get everybody vaccinated and we still have this problem with the pandemic, with people getting sick and dying and overwhelming the hospitals? Anybody know? So there's a thing called risk management. And what risk management would dictate to me is while you're trying to get these vaccines in the arms and all that, and I agree with all that. Okay, I'm getting mine April 1st. I agree with all that. At the same time, you should be making plans to probably ramp up the capacity of medical outlets, hospitals, and that sort of thing. Because if that thing doesn't work, the vaccine process doesn't work, that means that you're going to have plan B, and plan B is going to be you better be ready capacity-wise to handle what's coming. And it's not like haven't known for years. My office, the GAO, for years, wrote reports about this coming pandemic. I looked back and I looked at one that was written in the 70s that was saying that something like this was going to happen and that the federal government would likely be challenged in terms of getting the proper messaging out about the thing and having the capacity for medical facilities to handle all this. In the 70s, they told them that. Okay, so now, they've got the vaccine. I hope it works. But again, they always seem to wait until the what hits the fan before they start trying to figure out what it is they're going to do. Fortunately, they can issue debt, I guess, to buy their way out of the problem at any point in time. But then when does that Christmas tree dry up? I don't know. Okay. End of speech. I'm not running for office, I promise. Okay. All right. So that's the reason is, they came up with this idea. They tried to do it. It's not working, but because there's nobody dies because of it, they just go, or they can't borrow money. They still are able to borrow money. Nobody does anything about it, really. They talk about doing things about it. They write this report from DOD to confuse you, to make it sound like they've done something. We've got 32 auditors. We had 5,000 auditors. We had auditors from all over the world come over, and we still got a disclaimer of opinions. Oh, great. You probably should have got a few less auditors. You probably got in each other's ways. Okay, now back to this slide. Okay, so we're talking about what? We're talking about our fund financial statements, our governmental funds, using modified accrual. Modified accrual means what? We're going to go ahead and we're going to debit, and this is one example. There are many that we're going to learn in this class. But the classic example is when you purchase a long-term item like equipment, like a steamroller, you don't debit equipment at the governmental fund level, you debit expenditure. Meanwhile, later on, you'll have to convert that into our government-wide by making an adjustment of what I've talked about here. So notice that when we spend our money on a long-term type asset, we debit expenditure. Our job in the funds is to keep track of our current financial resources. Is cash a current financial resource?
Yes.
Yeah.
It is. It's your favorite financial resource. It's current and it's your favorite, right? And so it happens. Yeah. Just like if you were doing this for full accrual, you still credit cash because cash is a current asset that we're going to keep track of. But if it's a long-term item, we debit expenditure. So we are only going to be listing on our governmental fund balance sheet current items, current assets, current liabilities only. That's called the current financial resources measurement focus. Okay. Okay, good. Now we have
Professor, can I ask a question before I move on?
Yeah, please. Yeah, sure.
And maybe this will become more clear as the class continues, but how does modified accrual accounting assist in assessing fiscal accountability? Is everything put into an expenditure account in order to more easily track our total expenditures, or why are we doing this?
Well, not everything is put into expenditure because again, if you had a shorter term situation, it would be measured in terms of a current asset. So we would go ahead and say debit accounts receivable and say credit revenue under modified accrual accounting because account receivable is a current asset. So not everything's put into expenditure. If we bought inventory, because inventory is a current asset, we could debit inventory and credit cash. Okay, so not everything is put into expenditure, but when you get to longer term items, yes, they are put into expenditure. And that's because basically we're spending that money and we're basically trying to demonstrate that we have spent that money for the intended purpose of the fund, whatever's going on with that fund. Whereas with inventory, because inventory is more of a current nature, then we will probably use that inventory within the current period or soon thereafter, and so there they say, well, okay, in the context of 1 or 2 years, you're able to show us that you're using that money for the intended purpose. But if you get into a longer term, it might get more difficult to track that intended purpose. And so they tell you deal with the expenditure. Does that kind of answer your question for longer term items?
Yeah. Yeah, thank you.
Yeah. So I can demonstrate here quickly that I spent this money on what? This journal entry would be being made in the special revenue fund. So the special revenue fund can show you quickly, I spent money on, and you would have expenditure equipment, equipment, and users of your financial statements were able to say, okay, last year they spent $1 million, $1,000, whatever, on equipment. And that equipment was used for road improvement.
And in government, because like when you think about the accounting cycle, the difference between short-term and long-term is like things that fall within one cycle. Since the government's lifespan is indefinite, do they just have a 1-year current long-term difference?
Yeah, current items for the government would pretty much fall into that 1-year rule of thumb. Some businesses could have an operating cycle of longer than 1 year. So an asset that would be used in, or its future economic benefit would be realized in longer than 1 year could be carried current, say if you were dealing with, say, a winery, which probably has an operating cycle of longer than 1 year. But in government, yeah, we pretty much say, hey, that operating cycle is 1 year. We just stick with that rule of thumb.
Great, thank you.
Mm-hmm. Okay, good. Our proprietary funds, 2 of them, right? Our internal service fund and our enterprise fund, they use full accrual accounting, the economic resources measurement focus, okay? So what's happening here? Well, now they're saying to us that because your enterprise fund, your internal service fund are sort of like a business, they're like a proprietary entity, use full accrual accounting for those particular funds, use the economic resources measurement focus. So if a proprietary fund buys a long-term asset, they'll debit equipment and credit accounts payable, cash, or whatever, however they're paying for that, okay? Fiduciary funds, full accrual accounting, economic resources measurement focus. So I'm going to go back and think of that in terms of pension fund is one of the fiduciary funds. Think of that. Let's say you work for the government. Do you want a government to keep track of the economic resources that are going to be available to pay your pension? Absolutely, right? So it makes sense for the fiduciary funds to use full accrual economic resources. So when you look at this thing, this slide that we had before, I'm going to put this now back into slideshow mode. When you look at this slide that we had before, this should be your favorite slide. Okay, you should sleep with this under your pillow at night, okay? Because what's happening? Notice it gives me the 3 categories. We have 3 categories of funds. It does what? It lists the 11 funds, right? It gives you the mnemonic, right? It tells you whether the fund uses modified accrual or full accrual. And you may be saying, well, big deal, John, only the governmental funds use modified accrual. And if that's what you're saying, good. That means you know that already. But this slide is also telling you that we're going to use modified accrual. We're going to have what? Oops. We're going to have the current financial resources, measurement focus, and they even help you out by telling you no fixed assets, for example. Long-term items, what are expenditures? When we get to our what? When we get to our fiduciary and our proprietary funds, we do what? We're going to use full accrual accounting, economic resources measurement focus. Okay. Okay, good. Now we have everything on here. What's the one thing that's missing? This is what? Fiscal accountability. Okay, they left that out here, but this is fiscal accountability, right? They're used by the funds. Okay, now you come over and then they show you the, I hate the way Microsoft does their pins. Okay, then you come over and you have the government-wide statements. Bastards. Ugh. Why can't they make that easier? I don't get it. Okay, then you come over and you have your government-wide statements and you have what? Operational accountability. We said that on the slide, okay? And for my government-wide statements, I have two columns. I have governmental activities and I have business type activities, right? Okay, I'm going to use what? Full accrual accounting, there it is right there, full accrual accounting, economic resources, and what? Operational accountability. And then you might even mark this thing up to help you even more, which is to do what? Remind yourself that all of the governmental funds plus the internal service fund go into governmental activities. The enterprise funds go into business type activities. Our fiduciary funds, what? Are not reported at the government-wide level. So I look at this slide and I'm like, I gotta know this stuff for the midterms. I'm gonna print this out and I'm gonna sleep with this under my pillow. Question. Okay, good. And again, there's the basic model. Okay, and so what we're going to do on these next few slides is start to understand a little bit more as to what constitutes the various pieces of this thing. No, we're not. I think we're going to, okay, let's go ahead. Let's see where we get. We'll do a little bit longer. I just feel like you're getting tired. Are you getting tired? Are you tired?
Yeah.
No.
I stay tired.
Right? This is someone, a friend will ask me, are you tired? I'm like, always. Okay, but let's go ahead and let's spend about, we'll do about 10, we'll give ourselves a 10 minutes early out. Okay, so let's just go ahead and take a look. All right, so notice here now we're digging into the pieces of that model, the MD&A. Okay, and the MD&A is going to provide an overview of the financial position, the financial operations. Guys, they don't repeat the financial statements in here. They do what? You even saw it as I was scrolling through the city of San Jose. They give you charts, consolidated tables. It's a financial document, okay? But it's more of a narrative. It is a narrative written. It talks about things like the economic conditions. And you look back and you're like, well, John, can you update this, please? It's 2010, 2011. And every time I think to myself, why update it? Things are either good or they're bad. That's what's in the economic conditions thing. This was bad. At one time, this was good. I guess because of the pandemic, this is bad again. So it's either going to be a happy story or a sad story as to what's going on with the economic conditions. But that is something that is covered in the MD&A. Okay, so it's a financial document talking about what? About major initiatives going on with this government, et cetera, economic conditions, and so on. Okay, it is a written narrative. It is required supplemental information. Okay, then what? The next thing you see are the government-wide statements. And there are two government-wide statements. They are prepared using full accrual accounting, economic resources measurement focus. The two statements are the statement of net position and the statement of activities. Statement of net position is like the balance sheet. Statement of activities is like the income statement. So they have a balance sheet and an income statement. Two statements, balance sheet, income statement. That's it at the government-wide level, okay? Now, when they prepare it, it is going to be prepared using full accrual accounting, economic resources measurement focus. You know all this, guys. Two categories, governmental activities and business type activities. The internal service fund is in the governmental activities column. They say why? We know because what? The customers of the internal service fund are the other governmental funds. So even though we think it's proper to have it as a proprietary fund at the fund level, we roll it into the governmental activities column at the government-wide level, right? And then the fiduciary funds are not reported at the government-wide level. Why? Because at the government-wide level, we have an operational accountability focus, right? And how well you manage the assets that belong to others does not measure your operational accountability, because you don't use those resources in your operations. You are simply managing them on behalf of others. You have a fiscal responsibility, which is what we do at the fund level. Okay, now you just want to look over here right now. We'll look at this side later, but I wanted you to look over here at how we will present the information on our government-wide statement of net position, the balance sheet. And we say, first of all, I want you to remember your favorite song. I'm sure you sing this to yourself every day when you wake up in the morning. Assets equal liabilities plus stockholders' equity. Is that your favorite song? When I teach this introductory to financial accounting for my entrepreneurs at Stanford, and they're kind of learn to question and challenge things. And so in the first class, I say, assets equal liabilities plus stockholders' equity. And they say, excuse me, but stop. There is no excuse me. Assets equal liabilities plus stockholders' equity. They're not accountants, right? So you know that. But it's also true that what? It's also true then that assets minus liabilities equal stockholders' equity. Isn't that true? Okay. And the reason I point that out is that is the way we will show our government-wide balance sheet, our statement of statement of net position. Okay. Our statement of net position. So it's what? It's all assets, current and non-current. And we have to make that distinction because what? At the governmental fund level, we won't have long-term assets. So we say all assets, current and non-current, plus deferred outflows of resources. Now, deferred outflow of resources are kind of like prepaids, but not quite. And so we can't include them with the assets like prepaids are. So we come up with another category called deferred outflow. When you think about it, a prepaid, you've outflowed the cash already and the future economic benefit will come soon. Governments have some other kinds of arrangements that we'll get into later that are not quite meeting the definition of a prepaid, but are similar. So they list it with the assets and they call it deferred outflow. So we take our assets minus all liabilities, current and non-current. And then notice we also subtract our deferred inflow resources. Deferred inflow of resources are like deferred items, like deferred revenue, like unearned revenue, but not quite. They're a little bit different. And so since they don't meet the true definition of an unearned revenue, which is a liability, we put them next to the liabilities and we call them deferred inflow. And when you think about an unearned revenue, the money comes in, but you haven't earned it yet, so you report it as a liability. In government, We have some things that are such that they don't meet the definition of a liability. They're not really a revenue yet, so we call them deferred inflow, and we stick them next to the liabilities. And again, we're going to get well involved in understanding how these things work. The takeaway right now is, notice we say assets, forget about the outflows and inflows for a second, all assets minus liabilities equal net position. So net position is like what? Kind of like stockholders' equity in comparison to what we would say for a corporation, but governments don't have what? Don't have common stock, don't have additional paid-in capital. So the only component of stockholders' equity that governments really have is what? Retained earnings, and we call that net position. We call that net position. So I've said that a couple of times now. Net position is like retained earnings. Okay? Assets minus liabilities equals what? Net position. Notice we stop at net position. If this was a commercial version of a balance sheet, we'd be saying what? We'd be saying assets, right? And then we'd report our liabilities. Then we'd report our stockholders' equity. And then we would add our liabilities and our stockholders' equity together so that the user of the financial statements could see that the sum of liabilities and net position equals the total assets. Government doesn't do that. Notice the bottom line here is what? Is net position. We just stop with whatever the equity is, and we don't add up the liabilities and the equity to have an amount down there at the bottom that adds up to the assets, that balances to the assets. We call it statement of net position. Okay. Now you take a look at this slide, and I'm only putting this here now because I know that when I describe deferred inflow, deferred outflow to you, that's going to be, floating around your head. What the hell is that? What was he talking about? Okay. So what happens? If we have an unearned revenue, it's a liability. It is a caterpillar hoping someday to be a revenue, right? And then at some point in the life cycle of that unearned revenue, it's not quite a revenue anymore, but it is better than a liability. So what do? We call it deferred outflow. That's a cocoon, okay, that's going to turn into a butterfly. So it's closer to a revenue than a liability, but not quite. And so we have a special name for that in governmental accounting. We call that deferred inflow. And then finally, once it meets certain criteria, it goes from deferred inflow to finally the beautiful revenue butterfly here. So that's what we're doing there, where we have some things that are between a revenue and a liability. If it's not a revenue, we can't put it on the income statement yet, statement of activities. We can't put it on the income statement yet. So what do? We stick it on the balance sheet, the statement of net position, and we list it next to the liabilities because it's not quite a revenue yet. It can't go to the income statement yet. Okay, we'll talk more about that, but I'm just trying to explain to you here why we have this idea of deferred inflows, deferred outflows. Outflows are with the assets. Liability, deferred inflows with the liabilities. They're not assets, they're not liabilities, but they're kind of like them. And so that's why we list them where they are. Bottom line takeaway here, assets, don't worry about the outflows and inflows right now. Assets minus liabilities equals what? Net position. We don't gross up the liabilities and the net position to equal to the amount of assets that are reported. Okay. So you come over, and we've already looked at this, but now with our new understanding of the format here for the statement of net position, the government-wide balance sheet, right? It's a consolidated statement. We have assets. There's our deferred outflows. We have liabilities. This particular example didn't have deferred inflows, and we don't have to have a deferred inflow, okay, for a government. But notice we've got current assets, we've got what? Non-current, right? We are using full accrual accounting here. So you have current and non-current items. So there's my assets, there's my liabilities. I have my total assets here, okay, right here, my total assets. I have what? I have my total liabilities right there, okay? And then I have what? And then I have my net position. And the bottom line is not the total of assets and liabilities. It is simply what? It is simply my net position. And then we have the three categories of net position: restricted, unrestricted, and net invested in capital assets. So the main takeaway right now is what? That net position number is the last number you see on the statement of net position. If this was a commercial entity, we'd do what? We'd total up our assets and liabilities and report that total there, and that would match to our total assets. Okay, and again, you know, and I just showed you this a little while ago. For our enterprise funds, I can show you that what the total of the two enterprise funds, water and sewer, when you add their net positions up, that does tie to the total of the business type activity that's reported at the government-wide level, right? Now, sometimes students say, oh boy, that's beautiful. Do it for the governmental funds. I can't do it for the governmental funds and tie that to the governmental activities column, because what? In the governmental funds, they're using modified accrual, and in the government-wide statements, they're using accrual. Further, they're taking one of the proprietary funds, the internal service fund, and rolling it into the governmental activities. So it's not as easy as just adding up a couple columns and showing you how it ties. We're going to have to understand a reconciliation process in which we would start with fund balance and reconcile that to net position at the government-wide level. And if I try to do that today, your head will explode and then we'll be in bad shape. So we're going to get to that around chapter 8, to be honest with you, when you understand enough about the differences between modified accrual and full accrual, that whole reconciliation process rings totally, you know, you understand the elements of that. Okay.
I was about to ask, like, since we use the different modified accrual, and then for the business activities, it's gonna be like a full accrual. I was like, how does it balance out? Then you say conciliation. That cleared.
Yeah, well, for the business type activities, it's no problem because they're both using full accrual, right? Enterprise funds use full accrual, government-wide use full accrual. That's why I can add those together and it goes up there, okay?
Right.
The problem comes in with the governmental activities column, right?
Yes, that's right.
Right, and so when you look, they start with fund balance. This is the reconciliation that we're not going to have to worry about until chapter 8. They start with fund balance, and then they go and they make adjustments like adding assets, adding long-term assets, subtracting long-term liabilities. And then you see that 3730 number that does reconcile up to what we said was the net position in the governmental activities column. So you do get that same number, but you got to go a bit to be able to do that. And by the time we get to chapter 8, we'll be able to do this. Right now, there's too many differences that you wouldn't fully understand yet because we just haven't spent the time with it, and we can't do everything in one day. But at some point, we'll understand this reconciliation. But that has to happen. And the reason that has to happen, well, the visual that we've had on that reconciliation process, remember that stupid arrow that went back and forth? That was telling us we had to do this thing. Okay. All right. I'm going to stop there because we got to stop there. Okay. So what we will do is when we come back on Tuesday, okay, first of all, I'm going to call my buddy Xavier Gamez. Do any of you know Xavier? Okay, I'm going to talk to Xavier. I'm going to get a setup for the Becker stuff. If you don't want that, you need to tell me right away. Say, hey, dude, don't give Xavier my email, because I'm going to go ahead and I'm going to give it to him so that he can set you up so that you get the full FAR set of software right now. It'll probably last to the end of the class, and I might be able to get him to do a full 90 days on that. And then you already have the textbooks, okay? But if you don't want that, you need to tell me. In the meantime, guys, I would just sort of look back at that practice midterm that we went through, the slides from chapter 1 prior to class on Tuesday. I'd take a quick cruise back through what we looked at chapter 2 so that we can hit the ground running here. We'll finish chapter 2 next time. We'll do the chapter 2 practice midterm, and we should start making some nice headway into chapter 4 part A when we start getting into journal entries and literally start talking about revenue recognition. And we're going to understand the difference between revenue recognition rules for modified accrual and full accrual, which is going to help us to start to understand, you know, what we need to do with some of these reconciling items as we build that knowledge. Okay.
If we already have Becker, we don't need it. We should just send you an email on.
Yeah, if you don't
on Canvas.
Yeah, no, send me an email.
Okay.
So I have an email, so I know who not to include, because then I'll just kind of, what I'll probably do is do a cut and paste of everyone's email from my course roster. And if somebody has said, hey, you know, don't bother me with that, then I can just quickly take their name off. I think it's going to be a shorter list. If it's everybody, then, you know, I guess I'm wasting my time, but I'm thinking it's probably a shorter list if you already have it, for example, and then I'll just take you off that list and then I can send it to him.
Got it.
I wanted them to do it in a manner where I give you his email and then you email him, but they put the work back on my plate for this, but that's okay. It won't take me that long. Okay, guys. Thank you. Have a good rest of the week. Or maybe it'll stop raining at some point this weekend and you'll get a little sun. Okay.
Professor.
Thank you.
Bye.
Okay. Thanks, guys.
Have a nice weekend.
You too.